This story is absolutely insane. Imagine waking up to see a tiny sports tech company suddenly claiming a $100 million crypto deal, changing its name overnight, and then watching its stock crash over 90% in just one trading day. Sounds like a movie plot, right? Well, it's real. The ticker is YYAI, and what this company just pulled off has every trader online talking. Stay with me, because what I'm about to tell you might completely change the way you look at hype stocks forever. Now, before we dive into this roller coaster, quick disclaimer. This video is for educational and entertainment purposes only. Nothing here is financial advice. I'm not a financial advisor, and you should always do your own research before investing in any stock, especially high-risk microcaps like this one. You could lose part or even all of your investment. Got it? Cool. Now let's continue. So, YYAI, previously known as Conexa Sports Technologies, started off as a small sports tech company. They were making AI-driven smart rackets, motion sensors, and training tools. Pretty harmless, right? But in October 2025, they did something nobody saw coming. They rebranded as AirWA Inc. and announced a full-scale pivot into crypto and blockchain finance. They teamed up with a Singapore-based group called Jucoin Capital for a $100 million joint venture, including about $30 million in Solana SOL tokens to build the AirWA Exchange. The plan, a next-generation marketplace for tokenized assets, basically turning real-world investments into tradable crypto tokens. Sounds futuristic. But here's the crazy part. Right after that announcement, instead of going up, the stock absolutely collapsed. We're talking a 93% crash in one day. That's not a correction, that's a free fall. And then the very next day, it bounced back more than 30%. At one point, it was swinging over 1,000% intraday. Those are crypto-level moves in a stock market ticker. So what went wrong? Investors dug into the company's numbers and realized the financials were not exactly solid. YYAI reported around $12.8 million in revenue, which looked impressive at first, but the real cash on hand was only about $50,000. Most of their profit was tied up in unpaid receivables, basically money that hasn't actually hit the bank yet. Their auditors even warned there's substantial doubt about the company's ability to keep operating. That's never a good sign. And just when people thought it couldn't get worse, the company announced a 1-for-50 reverse stock split. Yup, for every 50 shares you owned, you now have just one. The point was to boost the share price above $1 to avoid getting kicked off NASDAQ. But here's the truth. A reverse split doesn't make a company stronger. It's like cutting a pizza into fewer slices. You still have the same pizza. Investors usually see this as a red flag, a move of desperation. At this point, sentiment was brutal. Retail traders were angry, short sellers were celebrating, and everyone was wondering why a struggling sports tech company thought it could suddenly compete with Coinbase, Kraken, and Binance in the crypto world. But then something interesting happened. An insider, Michael Anthony Belfiore, stepped in and bought around 3.2 million shares, spending over $1 million of his own money. That pushed his ownership above 22%. For a microcap like YYAI, that's huge. Suddenly, the mood online flipped. Social media traders started saying, wait, maybe he knows something we don't. Stock twits and Reddit were flooded with posts calling YYAI the next crypto moonshot. Still, experts aren't convinced. Major Wall Street firms don't even cover this stock. Independent research sites like stockinvest.us rated a strong sell, while TipRanks calls it underperform. The reason's simple. The fundamentals aren't matching the hype. Let's be real. Launching a tokenized asset exchange isn't like launching an app. It requires massive compliance costs, strong tech, liquidity, and user trust. YAI has almost no cash, no track record in finance, and a history of pivots. So while the story sounds exciting, the execution risk is sky high. And remember that $100 million partnership everyone's quoting? That's not $100 million or sitting in YYAI's bank account. It's a joint venture commitment. Part tokens, part assets, part future promises. There's no guarantee that money ever materializes. Still, markets love a comeback story. If YYAI somehow launches the AirWA Exchange, signs real users, or lands regulatory approval, the stock could spike again. That's why traders are watching it so closely. But until that happens, it's pure speculation, a gamble. So, what can you take away from this? If you're looking at small cap stocks that suddenly pivot into trendy sectors, AI, crypto, biotech, always check the balance sheet. Look past the headlines. Ask, do they have cash? Do they have real customers? Or are they just chasing the next big buzzword to keep investors interested? Because the truth is, hype can move prices fast, but fundamentals decide what survives. YYAI might become something big someday, or it might just fade into the long list of remember that stock stories from 2025. If you made it this far, hit that like button, drop a comment telling me whether you think this pivot is bold or desperate, and subscribe for more deep dives into crazy market stories like this. Thanks for watching, and remember, this was not financial advice, just an inside look at one of the wildest stock stories on the market right now. See you in the next one.